What's up, YouTube? Sterling Gabriel or Sterl Trades here, and today we are actually going over how a beginner can actually understand chart patterns and how they can understand how to read a chart, how they can understand candlesticks, just how they can overall begin to get a grasp for what trading is and try to understand this language that we all read. So for starters, I'm actually going to begin by explaining what a candlestick is, as this is the data that we read every single day, every single second, in order to see what is going on in the market and where price could possibly be headed to. So for starters, this right here is actually a candlestick. Everything you see on here is a candlestick, right? Let me get a good example so I can actually show you. This is a candlestick, right? There's going to be 4 different points on each candlestick. So point number 1, you're going to have the high, right? This is going to be the high. This is going to be the low of the candle. Bottom of the wick is the low of the candle. Top of the wick is the high of the candle, right? And then right here, you're going to have the opening price for the candle. This is for a sell candle. The opening price is going to be the top part of the body of the candle, right? So this whole thing right here is going to be the body of the candle. This whole black part right here is going to be the body of the candle. Everything that is not this wick, this wick, this wick, this wick, anything that is not these little wicks right here is a part of the body of the candle, right? So on a bullish candle, right, you're going to have this opening right here. This is the opening of the candle, the bottom of the body of the candle. The top of the body of the candle is actually going to be the closing price. And on a red candlestick or a bearish candlestick, the top of the body is actually going to be the opening price, and the bottom of the body is actually going to be the closing price. So within every single candlestick is a set amount of data, right? Depending on the time frame that you're looking at. So for instance, right, every candle on this chart is actually 1 week. This represents 1 week of data in the market, right? So if I go on the daily chart, then every candle is going to represent 1 day. If I go on the hourly chart, every candle is going to represent 1 hour. If I go on the minute chart, every candlestick is going to represent 1 minute individually, right? So right here, we're looking at the weekly chart. And you see how this went all the way up here, it came all the way back down, sold off all the way down to here, just to close off right here, right? Now, it seems like there's a lot of data in this candle, which there is, except this is actually just brought into one individual candle. And if we actually take a closer look on it, right, so we're actually going to highlight this box so we can go to this point right here on the daily time frame. This whole box right here is that 1 weekly candle that we just saw, right? You see how the top of the candle went all the way up there and then sold off all the way down there. That's exactly what happened, but this is the daily chart, right? So we're showing you this information, but like more spread out. So in this case, you're gonna see price. This is where price opened up for the week, right? So you're gonna see that the wick went all the way up there. This is from when price gapped up right here to this level and actually just ended up selling off, selling off, selling off, selling off. Right, so every single candle represents a certain amount of data or a certain time frame, right? So even for this candle right here, this one candle right here, this is actually going to represent 1 day, right? 1 whole day of price action. And if I actually look at this on a smaller time frame, so you can actually see the price action of the candle, you're going to see that price actually just continuously sold off, sold off, sold off, as that one candle represented on the daily time frame. But this is actually broken down into our individual candlesticks. So every single candlestick here represents 1 hour of data, right? So this is exactly what happened here. As we saw on the weekly chart, or on the daily chart, price actually decided to just do one giant Maribozu candle down, which is a full momentum candle with no wicks, right? So essentially, this is actually what happened though on this lower time frame. Every single candle represents more data, right? So even on the 1 minute time frame, right? So we're on the 1 minute time frame, right? This is actually how price action is going to look intraday, right? So meanwhile, you may get one daily candle that looks like this. Looks like price shot up, with this wick right here, price shot up and ended up actually selling off. Now, like we covered earlier, the wicks in the closing and the opening prices are all represented within that one candle, right? So this is the price where this day has opened. So if I my arrow tool, you see right here, this is where price ended up opening, because remember, it's a bearish candle, right? So that the top of the body of the candle is actually going to be the opening price. And right here, it's not a closing price yet because we still have 47 minutes left in the market, but So far, this is the bottom of the body. This is the top of the wick, meaning this is the high of the day. And the bottom of the wick, which there's a slight wick right here. This is the low of the day, right? So when we go back on the 1 minute time frame, we're actually going to see this is actually the price action for the day for this whole red candle that we are seeing so far, right? Remember how we had that wick up? This is that wick up on that candle. This is where price opened at. It actually ended up shooting up. It started chopping, retesting levels. It actually ended up shooting down, pulled back, shooting down, back to where we're at. Now, you may not know that there was a pullback within that whole red candle if you're just looking at that one daily time frame candle, but overall, it's showing you that price ended up shooting up there. It opened right here, and that right now the body is actually down here, right? So that's understanding what a candlestick is and the different levels of data that they can actually represent. Now, following actually learning what a candlestick represents, and you have to actually start looking at the different types of candlesticks that there are actually in the market, right? So I'm not going to cover them all in this video, as that is a video for another day. But right now, this is actually one candlestick pattern right here. This is called a shooting star. A shooting star is when price actually goes up, it hits a resistance and decides to reject back down, closing halfway or under halfway of that wick, right? So right here we have that shooting star candle, my arrow tool. We have that shooting star candle, and these happen at resistance. One thing is, you always want to take candlestick patterns or chart patterns only at levels. Otherwise, you're taking it in mid-space and it's just another candlestick. So you want to make sure that it actually has some relevance. Now, how do I know that this is actually resistance and that this candlestick happened at a level? This is when we start actually getting into what levels are, what supply and demand is, all of the other aspects of trading, right? So this level right here, right? This candlestick where the shooting star happened, I'm actually going to grab this horizontal line, which represents our support and resistance lines. You put it right here on top of that shooting star. Then you will actually be able to see that this actually indeed was a level. You see how price broke down here, retested, and it retested this heavily, created a triple top pattern, which is a bearish reversal pattern, created this triple top at the level, actually ended up selling off. Price actually ended up shooting up, rejected hard at this level, went down, broke above it, had a slight retest right there, and then afterwards decided to shoot up, right? Price came back down, ended up creating a bear flag at the level. And it was just kind of chopping at this level, chopping. Price came back to retest it, created the shooting star at the level, while we're already showing that the market structure is bearish. Something that I do want to say is that market structure and price action is very important when identifying what a certain chart wants to do, what an index wants to do. Market structure overall is what the actual chart is doing. It's showing the overall direction of the chart. It's showing the overall direction of the stock. It's showing where price has been headed lately and what has it been doing, where could it possibly head to, right? So seeing a shooting star pattern in bearish market structure after this uptrend right here, right? Characteristics of a shooting star. After an uptrend, it occurs at resistance, and you're going to want to see that hard rejection, right? So you see rejection, and you start getting this momentum candle, right? Price actually created this pattern right here, which is a bear flag. A bear flag is actually a bearish candlestick pattern, right? So a bear flag is actually going to be this right here. And it's actually when price decides to, let me show you. Price is actually creating like a flag, right? Sometimes also called like a bear pendant. But this is price created a flag right there, right? And this flag, if I actually put a level here, occurs at a level. As you can see, price bounced here, rejected here. It actually ended up bouncing here. And overall, when it came down here, after using the shooting star to shoot down, had this bearish momentum candle, and had this bear flag right here, right? Now, we're not actually getting into all the patterns today or candlesticks today, but I do want to show you all these different important factors that are important to know. So next up is what moves the market. What moves the market are these big institutions, these hedge funds, these banks. All of these are companies that actually have a lot of buying power or a lot of capital in order to be able to make the market make a big move. because one individual trader by itself or by themselves is not actually going to be able to move the market. Like you can't, even in Discord servers, right? Even if everybody just jumps on a play within that server, that's actually not enough buying power to necessarily be able to just move the market as a whole, right? These institutions are what actually move the market, and they like to buy at these certain levels, these certain times. This is what's represented as smart money, right? So smart money is actually the institutions, these hedge funds, and they're being smart with their buying. They're not just buying in space. They're not just buying anywhere. They're waiting for these dips to buy. They're waiting to sell at a lower high. They're waiting to buy at a higher low. They're trying to play smart, right? Which is why price is going to chop sometimes when price is just in space. Now, so when these markets are actually moved by these institutions or these companies, then they actually start to create what's called a trend, right? So as you can see, this is actually called a downtrend. Why is it called a downtrend? Because price is actually just going down, essentially. I mean, kind of like an uptrend, right? This is an uptrend, uptrend, uptrend. Price is just going up, trending up. But overall, the structure of this chart is a downtrend. You look at the bigger time frame, right? Trend analysis. You're gonna see you get this high, get this low, you're gonna get this lower high, you're gonna get a lower low, you have a lower high right here. So it would be assumed that you're gonna get a lower low next, because that's what a trend is. Higher highs, higher lows, higher highs, higher lows. That is an uptrend, a downtrend, lower highs, lower lows, lower highs, lower lows. So identifying the trend is important in trading because you want to typically trade with the trend, depending on the time frame that you're trading on also as well. So if you didn't understand what I said when I was talking about higher highs, higher lows, or lower highs, lower lows, I'm actually going to visually show you right now, right? So this is a high. You're going to get a low right here. This is the lowest point that price went to before it actually decided to shoot back up, right? Price created right here a lower high and shot down, broke this low right here. So this was the change in trend from this uptrend, right? And if you want to see a visual representation of the uptrend, it's harder to see, you can use your trend lines. Trend lines is also something that we're going to cover in this video. So right here, you can actually see that this uptrend was broken with this trend line. Now you don't want to just trade strictly based off of trend lines, but they are definitely a great confluence. Going back to the trend though, you broke the trend line, we had a high, we had a low, we had a lower high, broke this low to create a lower low. Okay, that told you right there, downtrend confirmed. You broke the trend line and there's a change in market structure. There's lower highs, lower lows instead of higher highs, higher lows. So that tells you that bears actually have the control for the moment. So when bears have the control, you're going to want to trade with the bears. If bulls have the control, you're going to want to trade with the bulls. Bulls are people that are buying, bears are people that are selling. They want the market to go down. So right here, back to trend analysis, we have this lower high. I'm going to create a lower low right here. Create a lower high. And then right here, this is actually not a lower low. This is what we call just another low, right? So that's actually going to be what we call a double bottom. This is actually a bullish reversal pattern, right? A double bottom is when there's literally two bottoms. Like there's a low and there's a low that matches it. And this means that price actually did not want to go down any further. This is a refusal to go lower, right? So when there's a refusal to go lower, price doesn't want to go down anymore. All it can really do is go up, right? So price decided to go up right here after this double bottom was created, right? So price actually broke this lower high right here. But overall, in terms of trend, right? This would be the high, this would be the low, this would be the lower high, this would be the lower low. Price actually never broke this bigger time frame lower high, right? This time frame lower high right here. Price actually ended up never breaking it, meaning that we are actually still in that bearish market structure. All price did was come up here to grab some liquidity. Liquidity are buyers or sellers that are waiting to get into play, but the play is not where they want to take this actual trade yet. So they're patiently waiting on the sidelines, waiting for their opportunity. And when they get grabbed, when the opportunity comes, that is when they get into the play. This allows for more players to actually be in the market, more players to actually get in this play to cause more of a momentum move. Now back to trend analysis, right? We have this lower high in reference to this high right here, this lower high. Now next, you're actually going to have a lower low. right? We're actually going to have this lower low right here. Lower low, lower high, lower low, lower high, right here at resistance. This is the resistance level that we actually drew earlier. We're gonna have the lower low right here, but it's also a double bottom, right? Because although price was down here, broke this low, it actually ended up coming back up and finding support right here, and actually didn't stay down here too long. This is represented as a double bottom. This is what we call a double bottom, as we just went over. So this is a bullish reversal pattern. As we said earlier, keep that in your head. Bullish reversal pattern, meaning that price is actually about to reverse from going down and is instead about to go up. So as we did right here, price actually decided to use this as a double bottom and went up, broke this level right here, retested this level, and actually went up. Now, going back to trend analysis, we have this double bottom, right? This low, lower high, low, but not a lower low, it matches this low. So low, lower high, low. Now we're gonna get this high, matches this high. So it's not a higher high, it's not necessarily a lower high, because we didn't actually come to break this low yet, right? Now we're gonna have this low. Now this is not considered a higher low until price actually decides to break this high, because then that's a trend change. Then we're breaking structure. We never broke this high, never broke this high, didn't break this high yet. So this isn't considered a higher low yet. It's considered a higher low once we actually end up breaking that high, which is a break in structure, right? So after that break in structure, and we come over here to match this previous high as well, price came down, created a higher low. This was already represented as a higher high after we broke this high right here, broke this high as well, then came to match that. So it's a higher high, guaranteed. And then we have this higher low. Price decides to go up, kind of matches this high, this previous high. So it just creates a high, not a higher high. Price creates a higher low though, because this is above this low. Price creates a higher low. And you know, it's clear we're in an uptrend at this point. You're matching lows, breaking highs, making higher lows and higher highs. That's an uptrend. So price actually decided to, you know, continue up as it was in the uptrend, right? But on a bigger time frame structure, right? This is why it's important to always look at everything. While on these smaller plays, you were able to profit off that uptrend, keep in mind that there always is the bigger time frame. You want to watch your bigger time frames, do your analysis of bigger time frames as well. Because right here, what do we have? We have a high, right? This was our previous bigger time frame, lower high. This is the period, this is the bigger time frame, lower low, right? But we never came to break this high right here. We never came to break this lower high. Price came all the way over here to that same level, but did not actually end up breaking that level. And if you can't see that, then let me get this horizontal line, use it as my support resistance, put it at the top of this high. And as you can see, price actually didn't break above that. It actually just used that as a level to reject off of. So at this point, that would be considered a double top, right? Use the same level as a high to reject off of. That's a double top. And another double top is actually right here, a better representation. Going to be this curve right here with this top. This would be the neckline, the double top, bearish reversal pattern. Then you're gonna have this other double top right here, this other high. They're gonna have a high and a matching high. That is a double top. That's a bearish reversal pattern. Now, it's confirmed a double top after you actually, you know, reject off of there from that same level, and we also broke the neckline. And then after we broke the neckline, we created this bear flag right here, smaller time frame bear flag. So of course, you know, price is going to shoot down. There's a double top. We never broke this high right here. So why would we not take these puts on a bearish reversal pattern in a downtrend? This is why price actually ended up shooting down at this bounce, at this low, this lower low. And, you know, it seems that price could actually be creating another lower low, right? Price might be actually coming to take out this low. Since we matched this high but didn't break it, we are actually still in a confirmed downtrend. So we actually could come to break these levels right here. And this level that I'm talking about be this. Price can actually come down to this zone next to try to retest it, try to create a bigger time frame double bottom to try to get a reversal or try to break this level. But it seems more likely that price would actually break this level since we are actually indeed in a downtrend. Now, another example of trend analysis, and this time is a bearish market structure once again. We're going to have this low right here. We're going to have a high right here. We're going to have this low, which is a higher low. We're going to have a matching high, so it's not a higher high. We're going to have almost a matching low, so it's just another low. Price is really just in a range. If there's not highs being created, if there's not lows being created, we are in a range. Price actually decided to break above, create a higher high, right? And then after that, price proceeds to go down, creates a low, which would be an assumed higher low since we are in an uptrend, right? But then it creates a lower high. This isn't a lower high yet until we actually break this low. But we ended up breaking this low, which confirmed this as a lower high, which also confirms a changing trend. Changing trend can actually be seen when you are seeing that there are no longer being higher highs and higher lows created, when instead there's actually a lower high and lower low created. So right here, we actually ended up having that trend change. Then we proceeded to actually break this level, break this low right here. And if I bring it across, I'm going to see that it was later used as resistance right here to create another double top, that bearish candlestick reversal pattern that we actually talked about. Double top in a downtrend. That is a bearish reversal pattern and a trade that you likely want to take. So price actually ended up creating a bear flag here as well. Another pattern that we'll go over on a different day, and actually had this double top and it rejected this same area once again. Now back to trend analysis, right? We have this low, we have this lower high, broke the low, created a low right here, very low low. I apologize, my camera ended up dying. So back to what we were saying, this is actually a lower low, and it's actually way lower than this low, any of these lows, right? Even broke this bigger structure low. So overall, this means that the overall bigger time frame structure is changing, right? That doesn't instantly mean take puts at that lower low just because the lower low was broken. You want to wait for opportunity to take your puts so you can maximize your gains and minimize your risk. So we're actually going to see that price came up, had this double top, right? As we were talking about, created a lower high, created another low, right? Another lower low, bigger time frame. We're seeing that price created another lower high. Well, it was a high, not another lower high. Price actually didn't significantly break this structure, right? So it was just a liquidity grab, you know, just identifying more sellers to get in order to create a bigger move, right? So we had this high, and then price ended up chopping for a bit because it was kind of confusing, because it's like, you know, we broke this, but at the same time, we broke the overall structure. So what are we doing, right? Price ended up figuring it out and ended up coming down again to create another lower low structure, right? Then we create another lower high, you know, say it with me, you know what's coming, another lower low. But on the bigger time frame, you see we broke this, right? On this time frame, we broke this high. But on a bigger time frame, this is the bigger time frame high. This is the low. This is the other low, right? You see that price actually never broke this bigger time frame high. Now, while it may be difficult to understand why that's not necessarily a break of structure, it's because on a bigger time frame, this was not a big break of structure. On the 1 hour, maybe. But on a bigger time frame, that's what's most important. So you can actually see the overall structure of the market. When identifying charts or when you're just doing your analysis, it's important to look at the bigger picture, right? So this is the bigger picture high, bigger picture low, bigger picture, lower high, right? Then we came down and broke this level, bigger picture, lower low, which is also kind of a double bottom. A double bottom, once again, is a bullish reversal pattern. It occurs at support after a downtrend. So after this downtrend, we ended up creating this double bottom. Price came up here to try to retest this resistance in order to try to attempt to create another high, right? But we're in a bear market. The market structure is bearish. We're creating lower highs and lower lows. So it's not likely that we're going to break that level. As we didn't right here, we ended up rejecting it, tried to retest it one more time, ended up rejecting that level. So bearish market structure is continuing, right? So recap, lower high, lower low, lower high, lower low, but also kind of a double bottom. And we created a lower high. What do you expect in a downtrend? You expect another lower low, right? So we rejected this level, created that double top reversal pattern. And it looks like right now price is actually trying to come create that lower low right here. So we're trying to target overall about 350 or 355 to be safe with this level of support. The price is coming down to this level after this downtrend, and it can be assumed almost that price is actually going to come down here. Since we are in that overall downtrend, we're creating those lower highs, lower lows, lower highs, lower lows. So let's see if we can create that. This is the lower high, but not necessarily yet because we didn't actually break the structure. But let's see if we can actually create that lower low, which would be assumed since we are actually in a downtrend. Now, as we went over before, we have trend lines. So right here is actually that trend line that we were talking about earlier, right? This price actually ended up breaking the trend line right here, also in the supply zone. Supply zone is another thing that we will go over in another video, but it's also a different version of support and resistance. So right now we actually have this trend line, it broke, and you can actually see that there was actually a downtrend right here. There's actually such thing as downtrend trend lines as well, right? At this trend line, you see how price was keeping it up. In an uptrend, this is what a trend line is going to do. It's going to keep price up. In a downtrend, it's going to keep price down. So price was rejecting it. It broke through, retested it, and shot up, right? So trend lines are actually used as another form of support and resistance, but they can also be used as confluence when taking a trade, right? Because say you were getting into this trade, right? And you identified a trend line, or even say this trade, since there's actually like there's more data, right? You're going to see that price actually bounced off this trend line also at a level, which was why we had this strong move right here. So that's good. You definitely want confluence. You want multiple confluences when you're taking a trade. Don't just take a trade based off of your gut. Now, to make a valid trend line, you actually want at least 3 touches. You want at least 3 touches. Sometimes you can try to assume or anticipate that a trend line is actually going to have that 3rd touch and actually use that trend line again, but 3 touches really confirms the trend line. Okay, so this is a perfect example right here of a good trend line. So we're going to see that price actually kept bouncing, right? So we're going to start right here. We're going to pull it up to these bottoms, right? To where we bounce. When you draw trend lines, you want to make sure that you have aggressive bounces, or that price has aggressive reactions based off of these lines. So right here, price bounce, automatically a trend line, 3 strong bounces. Now, price actually came through, broke over here, broke the trend line, right? Came down, retested the trend line to try to come down, but ended up bouncing once again at another level of support, right? So if you don't see the level of support, we're actually going to draw this horizontal line right here. And if I zoom in for you actually, so you can see it, and you're going to see that price actually had a bull flag right here. Price had a bull flag. It kept breaking and playing around with this level. Bounce right here to bounce up, and came back once again to try to bounce up, right? Price was saved by the support and also news at this time, because this is during the pandemic or shortly after. And this is where price actually, or where the market was just consistently just going up in a sense, just consistently just being very strong. It was essentially a bull market. Price just was easily going up. So price ended up bouncing right there. And if you actually look closer, this is a more advanced way to use a trend line. Price actually came back to retest that same trend line once again. Trend lines may not always hold up, but you see right here that it did hold up. And another way to see how trend lines are used, just one more example. You're gonna see this right here. Like I said, 3 aggressive moves off the trend line is what you want to identify as a real trend line, right? So you're gonna get this level right here, bounce, and then another bounce, pull it across, right? You see that price bounce, but when it came down to break it, it broke and retested it with, not only retesting it, it retested it with a bear flag at a level, right? So you would actually, because the levels don't always stay the same. Sometimes you're gonna want to adjust it depending on what the market is doing, right? So this seems like the clear level. We have this bull flag right here. We had a bounce right here with this wick. We had support created right here, nice support. You see how price is just kind of staying right here, nice support. Price came down, ended up breaking that support and retested it with a bear flag, bearish reversal pattern, right? And we also have this inside bar pattern right here. Knowing your patterns is very important. So make sure that you study, to make sure that you learn your patterns. Make sure that you also read the Candlestick Bible. The Candlestick Bible is also one of the best books to try to learn your candlesticks and to try to learn your candlestick patterns. So we retested this level with the bear flag after breaking this trend line. Major confluence, right? So many different confluences. And price actually ended up deciding to have this huge move down because we broke this major trend line where these major reactions were. We also were below support and we created a bear flag and had an inside bar pattern. This is why we had this massive move down. Now, swaying away from trend lines, we're actually going to go to support and resistance. So earlier we actually identified a couple key levels, which were these levels that we saw these patterns at, or these big moves at, right? So support and resistance are, support is something that is keeping something from going down. It's keeping the market from going down, keeping the stock from going down. It's supporting it, holding it up, right? Resistance is actually refusing or trying to stop it from going up. So resistance is pushing down. It's just trying to keep it down, right? So to show you an example, right, where we saw this bear flag just now, we have this bear flag right here. So it's a level, right? It's a clear bear flag. You see the support right here. It was used as support. I was going to show you this as resistance, but you see right here, it's also used as support, right? In the past, it was used as support with this bull flag, used as support where we had another bull flag right here. It was used as resistance right here. So this is a pretty strong level, right? We also had a bear flag right here. Now, price comes back to this same level. We reject it. The resistance is keeping it from going up. It's pushing it down, holding it down, trying the best it can to make sure it doesn't break through, right? So this was also used as support, right? Now, identifying another key level, typically identifying key levels, you also want to make sure you look at patterns, right? So this to me is a level. Why? We have a strong rejection right here. Price wicked up here, had a strong move down. Price came over here, broke and retested it with this candle, right? We have this candle right here where we retested it. Price broke it slightly, retested it, did not even go below the level, and ended up shooting up right here. That was the confirmation to get in the trade, right? Also with this change of trend, we broke the structure, right? Now, the bigger time frame, of course, is still bearish, but shorter, we have this break of structure right here. We have this high, higher low, higher high, higher low. So of course, price is going to shoot up. And of course, price is actually going to end up using this support as support, or this level as support. So we bounced up right there, came down, used it as support again, right? Bounced up. And for these levels, right? Oh, we use it as resistance right here as well, right? For levels, you want to make sure that you're actually marking these areas where big moves have actually happened, right? So sometimes it's not always just a level. Sometimes it's a zone, right? So identify that you see this bear flag right here, right? Candlestick pattern. Yeah, it's kind of like looking like a flag, right? So you would identify that level. I'm gonna put the first mark right there, the second mark right here. Sometimes price uses zones, right? So you see this is a zone. Price rejected this whole area, used it as support, came down, and then it rejected it right here. Rejected it right here. And then if you pull it across, price bounced right here, bounce, rejected, bounced in the zone, but it wasn't like a clean bounce on the top of the bottom. And then we ended up this is actually just going to be another level. There's so many different levels, right? But it's about identifying the important ones, the ones that are very important, the ones that are really important, right? So I'm identifying this as a level because we have this rising wedge right here. We have this gap down right here, which is where the strong move has happened, right? We also used it as resistance right here. Use it as a resistance right here. At the same time, we use it as resistance right here, where we had this little mini bear flag. Because on lower time frames, there's also patterns. This is a mini bear flag. This is a bear flag on the smaller time frame. We have this bull flag, use it as support, use it as support. And right here, we use it as resistance. You saw this, we had a doji at the top of an uptrend, which can also be a sign of a reversal. Then we had this strong bearish pattern. We have the strong bearish candlestick. and which is also where we had this bear flag, which was where we had a strong move down. And this is also the neckline of this double top. So really, in reality, we just came to retest that neckline once again. Created another double top, actually. Price actually ended up shooting down. And then actually ended up coming down here and bouncing off this level. Why did we bounce off this level? Well, it's not for no reason. If you identify this level, right? So first I'm gonna identify the level. This is the level where we bounced at, had a strong move up, ended up using it as resistance, and then ended up coming over here, just chopping around it. We used it as support a little bit right there. Price came back, used it as support right there, used it as resistance right there. This is a clear level, right? Clear level. Now, but why would you know before that this was a level, before this move actually happened? You're gonna know because if you go back in the past, do your analysis, you're gonna see price bounce right here, price bounce right here. We were wicking right here actually. Price had a bull flag right here after the gap up. This is where the market actually had a large move after this bull flag, right? Price ended up going all the way up there after that bull flag. So, of course, next time we get there, price probably wants to bounce as it did. This is also why it's also an important level overall, because of all the things that happened over there in the past, of course, it's going to come into play in the future, right? Which is why, we ended up having some of these big moves off of it, like this bounce right here, this bear flag right here. And while price actually came back over here and retested it once again. So that level continued to be used. Now, so for support and resistance, you want to make sure there are levels where big moves have happened, where patterns have happened, and where there are a lot of touches, where you're noticing that price is really just touching that area a lot and having some good moves off of it. That's support and resistance. So last one more support or even resistance, right? So you're gonna have this level right here where we created this bull flag before we shot up. We had support right here. Price was just accumulating, but after this downtrend, price stopped falling right here. So it was supporting it from going down, ended up shooting up all the way back up to resistance. Then price came and just actually retested this level with the bear flag shot down. And if you drew it as a zone, right? Drew it as a zone. I'm bringing it over here because this body right here, the body of this candle and how it bounced off right here, and how this was also used as resistance right there, this would be the zone, right? Because sometimes it's not just a line. Usually it's a zone, right? You're gonna get a zone right here, and then you notice that price actually decided to reject off that zone. It had that inside bar candle and rejected all the way down. It's falling. And just for the sake of it, since this is where we are actually at right now, so this level, price actually rejected it right here. We actually ended up bouncing right here with the bull flag, broke through. And now you actually see that price retested it. This could actually be a bear flag. So price can continue lower, right? Price can continue lower since we actually got this level. We got a pattern at this level. Now, of course, to figure that out, you would have to do more analysis. But overall, that's just like a quick, it's like a ballpark of what could happen next, because just based off of the price action and everything that's happening right now. And lastly, I'm going to give a quick example of supply and demand, as this actually requires a lot more detail to go into. And of course, I will go more in depth on these different concepts in the future, but I want to make sure that you have all these different tools together right now, right? So these are supply and demand zones are actually zones where there's, demand, right? So demand is where people are buying, there's demand for this product, right? So that means that product is getting bought up, right? Or even supply. These are the people that are supplying the product, or this is, in the market case, supply is actually where there is selling pressure, where there are sellers at. That's why it's called supply, because supply is the sellers, demand is the buyers, right? So right here, you're gonna get demand, right? Why is this demand? Because price was actually just consolidating in this area. It was a balanced period. We have a balanced period right here. If you pull it across, you can see that price actually is heading towards this area, right? And it kind of acts as a magnet. So price is actually heading back towards that area, which is where buyers will probably step in again. Or we can break the level, but this is just where potential buyers are at. This is the demand zone. You're gonna get that balanced period, right? Balanced period. Never trade in the balanced period because you're just gonna get chopped up. Contracts are gonna get chopped up if you're trading options. And the balanced period, you typically don't know where price is going to go. So this is where price could be targeting right now. And if we're doing supply, right, this is a potential supply zone. We had a balance period. You see the candlesticks, right? Before I even draw this zone, you see right here, we have a balance period, right? We have candlesticks that are just fluctuating in the same area. So that's another potential supply zone. And typically this is actually what supply looks like. You're gonna have that just clean consolidation or just clean chopping in the same area. So this is gonna be a potential supply zone for the future if price actually comes back up here. And to show you a supply zone that actually ended up being used, right? I'm gonna show you it in action. Supply zone right here, right? We have this balance period of candles. I'm gonna put it at the top of the body of this black candle and put it at the bottom right here where the candles we're using as support, right? So now if I drag it over, you're gonna see that price actually ended up touching this twice. They used it right here, rejected it. This was supply. Price came to the balance period, which is where price had a sell off, right? Balance period, came back to it. We're in a downtrend, price sold off again. Price came back up to it, to this supply zone, price sold off again. It's a supply zone, right? There was this balance period. This is where sellers stepped in before. And so this is where sellers can possibly step in the future, as they did in these two examples right here. This is also where price created a double top, which is why price decided to fall and why it's still actually falling. But something that's a key thing to remember, supply zones get weaker the more that they are used. Demand zones get weaker the more that they are used. But when it comes to trend lines get stronger the more that they are used. Now, one last example of a supply zone is this bear flag, right? Bear flags can also be used as supply zones because that is where more sellers stepped in, right? So you see this bear flag, bear meaning it's going down, meaning it's a bearish pattern, meaning it's a pattern where price can actually go down after seeing that, right? See this pattern, bear flag, you mark the zone, the entire zone of the bear flag. Now I'm not counting that because that's where price got down, but I'm counting where price gapped up, right? You pull it across, you can actually see that it was used as supply once again. Price rejected, price came back up, and rejected once again. Now, these are just different ways where you can identify these balance periods and how they're actually used. Now, in the future, I will do more in-depth videos on supply and demand, support and resistance, trend lines, so you can actually get a better grasp for it of how to identify them and how to use them. But I want to make sure that you actually have these tools to use and make sure that this video had most of the fundamentals that you need to study before you actually start trading or to actually become a successful trader. But you always want to make sure you have the fundamentals first before you actually start, and make sure you have it down. Don't just see this and be like, okay, yeah, I can go trade. No, you want to go practice these. You want to go look up more videos. If I don't have them out yet, by the time you're seeing this, you want to look up more videos on supply and demand, on trend lines, or on whatever that you need to learn more on. You want to make sure that you know these concepts. And lastly, I'm actually going to explain to you a risk to reward ratio and a stop loss. So a stop loss is something that actually prevents you from losing more money if you are in a losing trade, right? So I'm actually going to show you that right now, right? I'm going to show you a risk to reward ratio. So say you were in calls, right? Say you identified this bull flag at a level and you actually decided getting in there, right? So you decided getting in there. You want to make sure that you trade with a plan. You don't want to just enter a trade and not know where you're going to get out, right? So in this case, you would put it right here below this level. So where price rejected off of over there. You want to put it below the level. You want to get in at the beginning of the move. So when you identify that something can happen here, and you identify the structure and everything, right? You want to set your take profit, say it's up there. And you want to have your stop loss set so that if price comes down, then you actually end up getting stopped out and don't lose more money than you would have, right? Because in this scenario, it looks good, right? But say you decided to buy over here. Say you decided to buy when you saw price bouncing off of here, off this level. Say you were like, okay, so maybe we're creating a double bottom right here and you anticipated it and you think that price is actually going to come back here to match this high. Okay, so you're in the trade, right? What happens if you don't have that stop loss though? You thought you were in profit and then price comes down and you're like, okay, maybe it can come back. And then it just goes down further. Then you're like, okay, maybe it can go back and come back to get you in profit. But then it just keeps going down, keeps going down, keeps going down. If you do not have your stop loss set, your emotions are going to get in the way. You're going to be thinking, okay, maybe it can come back to me. Maybe it can come my way again. Maybe I can actually win off this play. No, you want to make sure that you have your stop loss set so that you minimize your risk and maximize your reward. Always. This is why we get into plays early. This is why we sometimes even anticipate them. You want to maximize your risk to reward ratio so that you're risking the least amount possible, but you're aiming to gain the most amount that you can from that specific trade. So one more example of a risk to reward ratio and stop loss being used. We're going to say, what if you tried to actually short right here? What if you saw price gap down? You entered right here on the gap down. You want to target down here, right? And say you don't have a stop loss. Say you have no stop loss. Okay, so you're in the trade. You're like, okay, yeah, I'm in profit. But then price actually decides to shoot up. And you're like, okay, maybe it can come down and come back for me. But price continues shooting up and shooting up and shooting up, and you're just losing more and more money until eventually it's essentially worthless. That's not what you want. You want to make sure that you have your stop loss set to specifically prevent that. This is why traders blow accounts. This is why people lose in trading. This is why they lose their money. This is why they do not become successful, because they do not use a stop loss. And their emotions get in the way. So they're over here thinking, okay, maybe it'll come back for me, but it never does. And then you're just losing more and more and more and more money compared to if you actually had your stop loss set, and you would have just lost that specific amount of money that you set, right? So instead, if you're getting in this play, have your stop loss set, have your levels identified. So right here, we saw this bounce at this level. We saw a bounce, we had this bull flag right here, we had a retest. So you would want to put your stop loss right above that level. Now, you entered right there, price went down for a second, but it ended up going up. It hit your stop loss. It's like, that's tough, but your analysis was wrong. I mean, it's okay. You're not going to win every single trade. And so, of course, that's why it's good to have your stop loss. So then you're stopped out maybe like a, $30 loss. This could have been like a, $200 gain in this specific trade, but instead you got a $30 loss. But that $30 loss could have been your whole investment in the play gone because you didn't have a stop loss. This is why it's important to have your stop loss. This is why it's important to trade with the plan. This is why it's important to have your risk and reward ratios set. I'm Sterling Gabriel. If you have any questions, make sure to hit me up. I'm on Instagram at sterl.1k or at sterltrades. And I got you. I'll make sure to answer all of your questions. Also, feel free to schedule a one-on-one with me if you want to go more in depth, if you want me to give you a more personalized criteria on teaching you. If you have any questions, just let me know. I got you. If you have video suggestions or videos that you want me to create, also let me know. This has been Sterling Gabriel, Sterl Trades, and I hope you have a good one. I'm out.